terms of the biggest confusion, I mean, Vian mentioned it as well, it's that capital versus revenue item. And for crypto traders or crypto investors, as there is the differentiation, your biggest stumbling block is ascertaining what was capital in nature, what was revenue in nature. Do they actually consider the fruit versus the tree analogy? You're staking tokens, typically akin to trading stock in nature, always revenue, yet the staked CA itself is then an income generating asset. So if it were disposed at some stage, it would attract CGT rather than taxation at the individual's marginal rate. And then we do obviously have something to look forward to, which is SARS are working on a guide on cryptocurrency. How robust that guide will be is yet to be ascertained, but they did confirm it yesterday in our panel discussion at the SATE Tax Indawa, that the guide is in progress. It will cover capital versus revenue, which is probably one of your key considerations. It will outline the filing requirements and how it's to be done. But again, like all guides, they've mentioned they're not issuing it in the form of an interpretation note or an explanatory memorandum. Merely a guide. It's a work in progress. It'll be a pilot. It'll be refined over the years, and that's basically where we are from a regulatory standpoint. And that then raises the subsequent question of, well, if they haven't issued a guide yet, why are they issuing audits specific to crypto-generated income when they don't have the framework within which to actually process that data?
Okay. I mean, I think it's a very necessary development, and this guide will definitely be a much helpful asset as we move forward in this space. And I think in lieu of that, that's the reason why we have this podcast.